Hey guys, welcome back to the channel. Today I'm going to be providing a market update on Bitcoin, Ethereum, and the general cryptocurrency asset class as we have just recently fallen back down to the 200-week simple moving average, and overall we're experiencing a lot of fear and overselling in the markets. So if you are new to the channel and you want to show some support, please leave a like and subscribe. So I kind of want to talk about Bitcoin here, kind of leading the asset class lower. We saw how Bitcoin took down its $25,000 low previously set on the May 12th capitulation, and I think this goes to show you the stages of the market we're in. We're in that deeper and later stage of the bear market, where a lot of people were hoping this low would hold and maybe would consolidate further, but we just didn't get that. We had very little bounces. We didn't really see much of a relief bounce, some people would say, which is unfortunate, but it just kind of goes to show you how we're in that phase where people are selling and Bitcoin's really oversold. A lot of the altcoins took pretty significant hits as well. We're seeing how Ethereum is bleeding very significantly against Bitcoin. So Ethereum is massively underperforming right now. We saw how in the past 24 hours Bitcoin dropped roughly 15%, and actually Ethereum dropped around 20%, and really it's just showing a lot of weakness. It has fallen below its 2018 cycle high. So that's pretty interesting to note, because Bitcoin's high in 2017, that cycle is at $20,000, so we are still above that by about, if we go to today's price, around 18%, but Ethereum has already fallen below it. If I switch over to Ethereum and just show you guys what I'm talking about, on a longer term time frame, you can see how it's already below its January 2018 cycle high, and we are below it by about 20%, so that's very significant. But I just kind of want to show you guys how it's had some relative weakness, and I think what this means for altcoins is that they are going to continue to have relative weakness against Bitcoin. And kind of the point I'm saying here is that, Bitcoin could easily fall down another 10%, but for the altcoins, I would expect that would most likely mean they drop 20-25%. So somewhere in that range where they're going to be taking on significantly higher risk than Bitcoin, and kind of continuing this trend where I believe they're going to be showing this relative weakness in the market, whereas Bitcoin is going to be kind of the king and kind of flexing its strength, where it outperforms the market, but in the worst way possible, where it's outperforming by just dropping less than the other altcoins. So I also want to talk about this 200-week simple moving average. It's the darker blue line, and I'm just going to zoom out here, going all the way back to 2013, so you can see how historically this blue line, this 200-week simple moving average, has historically been the bear market bottoms. So if we go to 2015, we can see in January and September we had price action around $200, kind of double bottoming off of this 200-week simple moving average. And really this was the end of the bear market, and following these two key tests we went on this massive bull market up to the 2017 cycle peak, and then we came back down in this next bear market. We came all the way back down to the 200-week simple moving average in December of 2018 at around $3,200. So we had sort of these two tests here, one in December 2018, and then a few weeks later in January of 2019 we had another test, and those both held, and that was kind of the end of this bear market, where we went on to this new stage, which was basically consolidation and accumulation. And then in the March 2020 capitulation, we saw how we had a closing price around the 200-week simple moving average, but we had a wick all the way down to the 300-week simple moving average. So that's this lighter blue line here. As you can see, this was the only time in Bitcoin's history that we've actually had a test of the 300-week simple moving average. And partly why that is because you need a minimum of 300 weeks to get this data, because it is averaging the closing price of the last 300 weeks. So obviously if Bitcoin is only 200 weeks old, it's not going to have a 300-week moving average. So I would expect, and by the way, today the 300-week moving average is at 16,600, and the 200-week is at 22,500. So there's this kind of band here, where I would expect the bear market bottom to ultimately be, right? I don't expect Bitcoin would be below these levels for very long. Obviously, we could wick below it, but that would most likely be short-lived. And I think, with Bitcoin, most likely, I would expect some consolidation between these two moving averages, where we get something. Just to kind of give you some sort of illustration, I would expect something most likely. Maybe we get a bounce, right? A little bit of a relief, and then we come back down, and then we really kind of consolidate below this. And this is what I would expect for the end of the bear market, where we come down maybe to this 2017 cycle high and consolidate between the 300 week and the 200 week, and ultimately form this bear market bottom around anywhere from $18,000 to $22,000. That's my expectation, and I think this is, it's pretty justified in a lot of other indicators. So the 200-week simple moving average, we basically just retested it, and historically, that has been the best time to buy Bitcoin. So I think the reason this time is different is because we have some harsh macroeconomic conditions, with the Fed being so hawkish and inflation becoming out of control. So I think it would warrant a new scenario or situation in which maybe we lose the 200-week simple moving average, but only for a few months, right? And I think that in that case, the 300-week simple moving average would be retested and sort of revisited as sort of the last resort and the end of the bear market bottom. So you can see how in March of 2020, the global conditions, the pandemic, obviously that caused a break of the 200-week simple moving average on a day-to-day time frame, and that caused us to go all the way down to the 300-week simple moving average. So I would expect something similar, where we might see some sort of break of the 200-week simple moving average in the later stages of the bear market, and ultimately some sort of bottom around the 300-week simple moving average, which is going to be continuously moving up, by the way. So it's at 16,600 today, but obviously in a few months it could be a much higher, considering how it is going to be moving up. Because if we go back 300 weeks, we can see how the closing price 300 weeks ago was only $620. So basically we are going to be replacing closes at $620 with closes at $22,000 to $23,000, and that's obviously going to bring this 300-week simple moving average up, and it's going to be continuously rising. And basically the later we test it, the longer we go before testing the 300-week simple moving average, the higher it will ultimately be. And I think, testing it at, between $17,000 and $18,000 towards the end of 2022 makes a lot of sense. I think that's a real possibility and something you should consider, because we have seen tests of it before in the March 2020 capitulation, and the possibility that the 200-week simple moving average might not correspond to the absolute bottom in this bear market. So that's kind of my analysis on Bitcoin, Ethereum, and the crypto asset class right now. I hope you guys did enjoy, and as always, I will see you in the next one.